Hi traders and welcome to the Technical Analysis Market Wrap on Friday the 19th of February. So we saw a pretty slow start to the week with the public holidays around the world on the Monday, and we never really got much traction on a lot of the majors, but we'll jump straight in and see if we can identify any opportunities for today or early into next week. So we'll start out here with the Aussie USD on a daily chart. It seems to keep pressuring this point that we've been talking about for a long time now. It's been weeks in the making, but this 77 sort of 80 area to 78 is very, very strong, and it's certainly trying to stay above and push this level. You can see the moving average has been holding it up for quite some time now, and although the MACD is flattening out on this particular time frame, that's only because the market's starting to go sideways and the moving averages are basically getting closer and closer together. So I'm not paying a lot of attention to this at the moment on this particular time frame, but I am concerned that it is not really busting through. I think what we need to see is a big candle break. I mean, it's obvious that we want to see a good daily candle break above that 78 level. And if it does that, I'll be convinced that the 80 zone is definitely its target, because you have to go out quite a bit to actually even bring up an 80 zone. I'll take it out to actually a monthly chart and show you what I mean. If we bring it up we'll put it right on the 80, and you can see some of the very, very key levels that have been in play around through here, the double top that we had back here in 2017. So you can see for many, many years, this has been a very, very key zone for it, apart from the fact that it's obviously a very key round number being the 80 cents, so the 000. So, knowing that, that's our target, there's no question about that, but it does have to break this level here. Okay, now if it does indeed break up there, we can see an inverse head and shoulders that we talked about at the Q&A this week. It's definitely there, and the two shoulders are being supported by the 20 moving average, which is actually significant as well. So you can see here, this is the left-hand shoulder, the head right through here, and the right shoulder. Now, if we do get a break above there and we measure the inverse head traveling distance, it's going to be right up to the 80. So that's technical analysis really, basically covering itself from a technical standpoint, and also a very key resistance point. So it's really, really good when you get that double up, and very likely to happen if we do get the close. But it has been promising for quite some time that it's going to, and it has not done it yet. So it's really a watch and see. Taking any longs is precarious at this point until you actually get that breakout, because the distance from where it is currently to where the first real resistance is before it breaks, which is around this level here, around that sort of 78.15 to 18 area, is a very, very small range, and it is being trapped in a very small condensed pattern. So you want to be really waiting for that breakout before you start trading the Aussie. All right, so we'll move on to the US dollar CAD. It started off the week with a bit of a move up, but obviously the 20 has pulled it up again. This is the second time in a matter of weeks that the 20 moving average has actually held. It's tried to break up above it, and you can see here it's a pretty big sell-off candle. Like it's a whole day's worth of trading, so it is significant. And it's finding itself again at this level of support. Now, we talk about it every week about the 126 to 127 area being a very, very strong level for the CAD. Nothing has changed in that regard. It's been quite some time. This is pushing its third or fourth month in this area now. MACD is definitely pushing up, and although, again, even though it is a good sign, it's only because we're going sideways and the moving averages are getting closer together. Until we actually see a proper break, it's very hard to trade this one. But in saying that, it's actually a better scalping opportunity than the Aussie USD is, because the ranges that this one does go through are actually tradable. So as an example, if we get down to that sort of 126.20 area again, which is around this level here, you know that you've got at least almost 100 pip move to the first real resistance. So it's a pretty good range. And even if you don't get the entire move, you can still extricate maybe 50 to 80 pips out of it without much trouble, which I think is really, really important. So I'm not inclined to actually short this one to that level, because I think it is really wanting to break up higher. And when you know that something is at a very key support level, it's difficult to short it with any conviction. So I'm more looking for those scalping opportunities long, but it does need to absolutely break this level good and proper on a daily. So it needs to get above the 128 and close above there on a daily candle before you can start looking for the real longs, which are going to go to probably the 130 to 133 again. Definitely possible for this pair, but it's a case of just scalping it until you get that pattern. But in the meantime, trade it between the gaps. You can trade it off the 20, and we do need to see that break. So if you want to get involved in this trade, you got to go to the smaller time frames. Of course, you can see the 1 hour has been pretty sideways in the last 24 to 48 hours, but you had pretty good action previous to that. You can see here that it's respecting the moving averages quite nicely. So you can definitely trade it, but at the moment it's absolutely in a holding pattern. You want to be waiting and seeing if we get the bounce off this level here, which is a 126.80 level. If it gets above the 127 and breaks above these moving averages on the 1 hour, I think it's not a bad trade up until that sort of 128 point. So definitely a scalping opportunity, but no real long-term setups for this one until it actually does get a decent close on a daily candle above that 128. All right, we'll go over to the dollar index first before we get excited about the euro. This one has, again, you can see that it's pushed up above the 20 moving average in the middle of the week, and it's come back. Yeah, yesterday's trading or last night's trading has pulled it all the way down to the 20 again, but importantly, it is holding above there at the moment. Now, if we do, we are seeing a bit of a flattening of the dollar index. It's promised to go long for us, and it hasn't done it yet, but it certainly hasn't let us down in the aspect of actually being able to trade the euro. So we'll jump on that one in a second, but as you can see, sitting on the 20 moving average, if this candle holds up above it, so this is a daily candle, if we can get a close above or very close to the 20 moving average, it's going to be a good sign for the dollar-based pairs that the strength is going to remain. You can see this is a very key area. I'll draw a horizontal line there so you can see what I'm talking about. Obviously, all of these candles here have it's provided support and resistance points right through here since basically the start of December last year. The 20 moving average is the only thing that's propping it up. If it gets even to this level, I'm probably still thinking it's okay. What we don't want to see is a close below it. If it closes below that 90 on a daily candle, it could definitely test the bottoms again here at 89. So that's the one thing you've got to be mindful of. It's all about price action on this one. Not that we're going to trade the dollar index anyway, but it tells us a lot about what is happening with the euro. So we'll jump onto that one next. So the Euro USD is obviously the inverse of the dollar index. So this is the one we'd probably like to trade if we were going to take a trade because of what the dollar strength is doing. And yeah, this one here, you can see that we've had the series of lower highs and lower lows, no question about that. So the change of trend did happen on a daily, but it had a little bit of a resurgence here and was pushing above the moving averages. Now, they both have flattened out, as you can see, both of them basically running parallel with each other. And these are key moving averages. These are the 20 and the 50. So we're certainly going to respect them. But the fact that they are flattening out is going to be proving to be a pretty strong resistance point. So just like the support is there for the dollar index, this is proving to be resistance for the euro. What we want to see now is a continuation and a breakdown lower from this level. I still think it's got 1950 in it if we get a smaller time frame change of trend. So the way we want to be playing this one, we've seen strength in the last day, but we want to be going probably to a 15-minute chart. You can see we've got pretty strong action here. If we get a series of lower highs and lower lows on the 15-minute time frame and it gets below these moving averages, I'll be pretty comfortable that this is probably going to go short, and then we can start looking at the bigger time frames again and aiming for that sort of 119 sort of 50 area is a logical target to go. Don't really want to go for anything longer than that yet until we get some pretty serious moves on the daily and the 4 hour. But from a scalping standpoint, I want to see that short and a reasonable change of trend here on the 15-minute, and then you can target the 119 area, which is going to be a role reversal zone for it, no question about that. Very, very logical target, and that would mean also that the 20 and the 50 are going to hold the resistance right here. Failing that, the long journey is a tougher journey, but it can definitely do it. What it needs to do is break above the moving averages here on a daily chart and get a daily close above that. Then we get the lightning bolt effect that we're looking for. So we've got the low, the high, the higher low, and at that point we'll have a higher high. And then we're looking at a totally different trade at that point. We're looking at retesting the highs again at around the 123. So very different trade. And also what would happen in that instance as well, if it was to close up above this level, it's going to give us an inverse head and shoulders, which is obviously an important pattern on a daily. So you've got the left shoulder there, you've got the head here, and what will be a right shoulder if price happens to get up there and close above there, which would be the technical neckline of this pattern if it did get up there. So one to definitely watch. It can go both ways, so I wouldn't be completely biased on one direction on this one. It needs to prove itself on the smaller time frame for the short, but for the long, even on the smaller time frames, I'm not keen on taking the long, mainly because it's going right into resistance. So The key point here is if it does go short and it makes a smaller time frame change of on a 15-minute, you know you've got resistance backing you up, so you can definitely go short. But to follow it long, you have to break a very key resistance zone on a daily. So even on a 15-minute chart, although it looks quite lucrative, you know you've got trouble right in front of you, which is not the case on the way down. So that's why the short is the better scalping trade at the moment. But again, if we get the move up and it does break here on the daily, it opens it up to the longs as well. So quite important to remember that. So we'll move on now to the US dollar yen. This one has continued on its strength from last week. Like we were around this level at the end of last week, and you can see we had the indecision candle, which is basically a long-legged doji, right on the 20-moving average, which was ideal because that was also a roll reversal zone. Very, very key zone for this particular trade. The 20-moving average provided a perfect platform for it to launch. All it's doing now is basically just pulling back a little bit. What you don't want to see in markets, especially when you're trying to trade them, is just one big, long, continuous move without any pullback. So little mini pullbacks are actually healthy. The 2 steps forward, 1 step back approach is always the most healthy trend to be trading anyway. So this little pullback is probably healthy for it. It's getting into a range now that is actually a bit of a roll reversal zone as well. So if you actually So we'll just draw the horizontal line here, and you can see that this was a pretty serious level of support and resistance right through here. So basically the 105 sort of 60 area, 105.60 to 105.80 is the whole zone. So what we're looking for here is probably a continuation. I don't think it has to go all the way back to the 20 to actually relaunch from here. Like we know that the dollar index can turn on a dime for strength-wise, so the dollar strength would certainly come. And this could be the perfect launching pad for it. But what I'd want to see is a bit of a change of trend on a smaller time frame to continue this up. So in this instance, I would probably go into maybe a 15-minute chart. You can see here, if we get a series of lower highs, higher highs and higher lows, the lightning bolt effect on the way up, we know there's support from here. That would launch us back into the previous highs, which is the first target would be obviously the previous high. We know it reached there for a reason. That's obviously support and resistance as well. And that's about 70 pips away. So it might take you 20 pips to get in. So it's still a reasonable scalp from the standpoint of a 30 or 40 pip move. But if what we'd be looking for really is a continuation of the trend from that point onwards. So although we're going to find resistance there, which is fair enough, it's still far enough away. Probably the real move would be up to 107. So you could definitely potentially get 120 to 150 pips out of this one if it does the right thing and actually changes over. So what we need to do is look for the opportunities on the smaller time frame to give us the view that it has changed, and if it does start to continue up, we'll trade it up to the 107. So potentially a good trade this one because it has been showing a bit of strength and it is coming down to a pretty key zone to reload. So the last one we'll have a look at is the S&P 500. This one has been pretty much weak for the whole of the opening of this week. So that candle there was when it basically had a public holiday, and there was probably just a bit of optimism that it was going to continue on long, but it's been effectively weak for the rest of the week while it's been open. Now, what it has been doing, though, apart from this candle here, both of the last 2 days have shorted off pretty aggressively and then picked up towards the end. You can see this candle in particular, it basically closed where the previous one opened, where the open was, and this one here, a lot of it has retraced off the 20-moving average. So you can see here the 20-moving average basically pulled it up and it retraced quite strongly all the way to the close. That's generally a sign of strength, but I guess the problem with it is, though, what you don't want to be seeing that is all too often it's actually doing that. It's done it 3 times in a row now where we've had pretty weak days after an optimistic day that the market wasn't even open. So that tells me that maybe the momentum is starting to run out of this one. It's had, if you did trade it to this level, which is what we were talking about last week, you would be already out because this was the level we were targeting. And although we can see the open here, we've got no market action at all, obviously, because we've just switched over to the new candle. It's going to be an interesting one. I don't think this is worth trading just yet until it actually does something significant. And by that I mean daily has to either close above this level here, so above the 39.70, or below the moving average at around the sort of 38.70. So it's only a 50 to 60 sort of point move in between these levels. Hard to trade on the index because it's not really a great one for scalping really, really small moves. I would rather wait and see for a proper break at a proper level. So daily needs to close above the sort of 39.70. If it does that, I'd be convinced that we're probably going to get a bit of action to the move up. The preferred trade and the easier trade is the move down, of course, because the up, when we're moving up, it's hard to predict where it's going to go to. 4,000 seems to be the logical level where it wants to get to, but no one really knows for sure if it's going to get there. So the optimism tried to get it there, and it couldn't quite. The easier trade is definitely to break down because it has got some serious pullbacks in potential levels. So you can see here, this is the first one at around that sort of 3,700, which is a good 200 points lower than where it is now. And failing that, if that level fails to hold, the 3550 is the green line here that we've got, the horizontal line. That's the other target where it's a really, really good roll reversal zone. And really, for this one to be healthy and probably push up past 4,000, it does need to come back to one of these levels. So the easiest scalp would be to wait for the break of the 20 moving average, even though it's got this to contend with. I think it can get past that without too much drama. And if it does that and closes below the 20 moving average, that's what we want to see, a daily close below the 20 moving average. Not so much about price, but about the moving average. Then we can look at shorts down to this first level in particular, being the 3,700. And if that doesn't hold, that's still a pretty reasonable move anyway. That's probably about 150 points from where it is after it breaks the 20 moving average. And if that level fails to hold, we can start targeting the bigger one at that 3550. But in the first instance, I'd be scalping it down to the 3,700 level, which really makes sense for what this trade is trying to do, given the levels that we're at. So I hope everybody's had a great week's trading. We haven't really had awesome opportunities. I think they've been fairly constricted and tight. There have been some small scalping opportunities, but if you got hold of them, great. But don't be too disheartened if you didn't, because the markets were pretty sideways and we didn't get moves that would, really make everybody as happy as they should be at the end of the week. So hopefully that picks up later today or into next week. We'll start getting some moves out of these key levels and really start to see the trends kick on again on some of these majors. Have a great weekend, everyone, and I'll see you all next week.